So Joseph, I have another client who is a seller and she wants to sell, but she's so fearful that she's not going to get the price that she so desires because of the market. You know, we're seeing a lot of price reductions. I kind of know it's like a strategy, but I wanted to kind of get your expertise on what would you suggest?
Well, I would.
And she has to buy.
And she has to buy. So I would think that would lead to a deal on her upcoming purchase, number one, right? So if she's having to take a little bit of a haircut on her current sale, you would think that she'd be able to negotiate maybe a lower price on the property she's looking to buy. But if she's worried about her current sale, what we are starting to see is sellers, rather than taking a price cut of $25,000 or $50,000, to actually chip in and help the buyer qualify for a lower mortgage rate. And this strategy tends to help the buyer much more than a simple price reduction. And the most recent scenario that I drew up, a price reduction of $50,000 was going to save a buyer about $250 a month. But if instead the seller contributed about $18,000, the buyer would lower their monthly mortgage payment by close to $1,000 a month. So there's a product out there, it's called a temporary buy down. It's not an adjustable rate mortgage. It's a 30-year fixed loan, but in years 1, 2, and possibly 3, they have an interest rate that is lower than current market rates. So let's say rates are at 6.5% today. In year 1, that interest rate could be as low as 3.5%, 3 percentage points below current market. And that can save the buyer 3 times, 4 times, 5 times the amount of a price reduction. And so if we want to look at creative ways to help facilitate a transaction, that might be one way to do it.
And then that's something that she can apply for her own purchase, possibly.
Correct.
So, wonderful. Well, thank you.
You're welcome.